Hello, everyone, and welcome back to the J22 Report. I am your host, Johnny Market. You all know that drill. Smash that like button. Subscribe if you haven't. Just a little disclaimer nothing should be construed as financial investment advice, just my opinions, thoughts on the markets. So let's get into today's stuff. Big news, and first I want to say is, for all disclosure, I trimmed a little bit. I'm actually going to sell a little bit of my physical. I have a big physical silver this weekend. I'm going to go to coin shop and sell some just because I have so much. And I was going to say, this is what you do in markets. You you trim. You just trim as you go up. The amount of exposure you have should lessen as price goes up. And I hate to sound like a trader, but most of the time, all that matters is price. Low, buy. High, sell. It's not that hard, but it is very hard. I do buy a little bit of oil stocks because oil's so low. Uh, just my opinion, just what I'm doing, not financial advice. These are for educational purposes because I do think a lot of people can learn from it, or just sometimes they need common sense in their life because there's so little. So that's one of the reasons I do it. But let's get into today's stuff. There's a lot to talk about, and I mean, first thing is there's a lot of news. We'll get into it, but when you hear bad news, like let's say I'm going to sell some physical silver this weekend, people are gonna be like, "Are you nuts? Did you just hear what they said about the banks?" I just want to go to history, and I thought it was Moody's, but it was Standards and Poor, and it was unreal because U.S. debt always had AAA ratings at the time, and so here it is. There was no Moody's downgrade of U.S. credit, but Moody's changed its outlook on U.S. debt to negative in June, following the August 2011 downgrade of the U.S. by Standard and Poor's. The S&P reduced this rating from AAA to AA plus, which I mean, if you ask me, I think should be rated junk. But that's a whole nother thing. But generally, this type of stuff you see more at tops than at bottoms. Now, I don't think this is the top, and I said it on his channel many reasons. I think silver's breaking historically has had historically big breakout at 50, and it's tried it once in 1980. It's tried it twice or once in 2011, and I think this time's going to break. So, but I mean, you just want to trim as you go up, as you go. So, uh, let's see what else. I thought I had somewhere. One other thing. This is the other thing that worries me. This is why I'm trimming, do what you like. I think it's always smart to trim profits on the way up. Gold and silver are trading near record highs. Wall Street thinks more to come. Was Wall Street talking about how like they thought gold was a great buy at 2000? Were they? Like, did you hear any of them? Did any of you hear Wall Street say last year when silver was around? Let's go look at silver real quick. Let's see. I just want to, let's see. Oh yeah, Yahoo Finance might have it. I just don't feel like going to Kiko. I hope there's more, but Asia, cryptocurrency, like seriously crypto. So yeah, here, good. We got silver. I just want to get exact price line for accuracy. Well, maybe not exact, but you know what I mean. Just go to the 5-year chart. 5-year. Why can't it go just to 5 year, one day? Like seriously. All right, good. Finally, the chart. Oh, 1 year, 5 year. Okay. Were any of them when silver was at 23 in January of 2024 or the end of 2023 when silver was at 23 bucks? Were any of them saying it was a great buy? Or here when silver spiked down to 28 in March of 2024 of 2025, or any of them say it's a great buy? No, there's even in 2023 when silver was at 20. Now, I was saying all the way through 2022, since my channel is open through 20, it was a great buy. I'm not saying this in a braggadocious way. I'm just saying I like to buy things cheap. Now that it's up here, I'm not pounding the table. Gold, if you listen to this channel, I was bullish. It's good at a 5 year. All through 2022, 1800, all the way through, just all the way through here, 2022 through 2024. And now I just think and hold. I don't think this is the top. I just think if you want to get inflation exposure, I think, in my opinion, and this, I am trying to buy a dividend stock portfolio made up of all these, but look at this, commodities all the way. Crude. I think this is the only thing worth buying on the market right now. Crude oil, it's 57. Let's go on a 5 year. It's up a little, but it's way off from its, and that's why. And then when it breaks 70, I'm probably going to stop buying. And if everything's like this, I'm not going to buy anything. And there will be one day I'm going to be bullish on US stocks, believe it or not. So, anyway, let's get into this is something I talked about. And if you never heard about these problems, then you should subscribe to this channel. So, NASDAQ slides regional bank woes hit markets. And I was saying, like, all these problems are legit and that the markets cannot avoid them forever. They cannot pretend they don't exist. So the regional banks, now you have to remember, it doesn't mean the market's going to crash. Remember in 2023 or 2022, I think it was 2023, three regional banks went down. And AI, they thought was just going to, what is that? Silicon Valley Bank. When was that? Let's just see. March of 2023. What happened to the market? The market went up that year. So don't get too cocky that this is a stock market crash. But these bank problems are not over, and it's going to spread to the JP Morgans and the Bank of Americas. I don't know when, but it's coming. So now I don't want to talk too much because I like this article more. I'm not a fan of CNN. It disgusts me. I have to use it. But in some of these things, they do have good, like their fear and greed index, and then this. And then those are only two good things I like. So look at this. Credit market turmoil and region banks' exposure to bad loans. Well, what are they? We've talked about them on this channel. You can probably go with them. The credit card, auto loans, housing, mortgage loans, those are going to go under. Commercial real estate. There was another one. I just keep forgetting. There's so many bad ones. But let's keep going. Trade tensions, yeah, right. But I've talked about these bank problems. So Zions Bank Corp sank after it disclosed it would take a $50 million loss because of a bad loan. Western Alliance dropped after it disclosed it's suing a borrower over the allegations of fraud. This is fraud belong. So here it is. Credit quality worries are plaguing Wall Street today as fears mount that there are multiple large lenders with heavy exposure to problematic loans with limited collateral. Here's another thing. You heard of the China's, I think, bridges to nowhere? The AI data centers are really the centers to nowhere. And this is on the hands of auto lenders, First Brands, and Tricor holders filing bankruptcy in September. Now, auto loans, that is one thing I've talked about. That is, student loans are a bad one, but I don't talk about that as much. But that is a bubble, and I don't know how they're going to deal with it. Uh, they're supposed to be the smartest guys in the room. No, they're not. The problem is our corporate class. A lot of them should be. I don't want to say it. I don't want to demean other professions, but they don't. A lot of people that are successful in America shouldn't be, and a lot of people that should be aren't. That's why I don't really judge people by. A lot of older generations judge people. Oh yeah, they're very successful. They're very. I don't. That doesn't impress me because a lot of people that shouldn't be, and a lot of people that are shouldn't be, and a lot of people that aren't should be. So here it is. CNN fear greed index is at extreme fear now. And yeah, so if you ask me, these banks are look at this. JP Morgan disclosed that $170 million exposure to Tricolor. So if you ask me, the banks are finished. We're gonna have a lot of that, but it might not be this year. Uh, we've had Silicon Valley and the banking concerns, but this is far from over. And this could be the year. I don't know. I don't know. Uh, but I will trim some like physical and I've trimmed some of my juniors. And the main reason is just like I showed you with the 2011 downgrade. That was, I remember everyone's like, oh, they're downgrading US debt. Gold's going to go to the moon. That was really a top. The other thing, too, I want to get into is trade jobs. I found this interesting because everyone's saying college is worthless, go to trades. All I have to say is don't believe everything you see, even if it feels very anti establishment. Trade jobs face higher unemployment than office work, despite all they say is we need more tradespeople. We need more tradespeople. Maybe we do. But the reality is we don't have a very, I don't know. So, but don't believe everything you read. Uh, let's go into silver one more time because the reason why I did gold to 3,000, that was my target. And the reason it was my target was because it just looked like it was going to go there. I could tell by sentiment indicators, by build up. It was just it hit 2000 in 2011, hit the price of 2000 in 2020, then it hit the price of 2000 2022, and it just wanted to go. It wanted to break it. And after all that, when you break something that's based under 2000 for that long, it's going to go far and it's going to go. And I just looked at other asset markets when they're, stock market, Bitcoin, all these, they're just skyrocketing. Skyrocketing. And so I was like, gold's got to make somewhat of a run. And then I looked at the historical stars and I said, gold doesn't have any historical, but silver does. And so I said, the next move, I mean, you can go back and look. Silver's going to 50. And the reason why I said that was everything's making new highs. That was 79 or 80, 50, 2011. And silver was just lagging gold. And look at it, it was straight up based. And then this is a big thing on the chart. And that's another reason I'm selling. Now let's go back to a 5 year. That has a little bit where it's not bad on the 5 year. 1 year, I'm not a technical analyst, but I just, when I see, if you look at the 1 year, it is stepping up some. But if you look at it, this has been over 50 for a couple of days now. And I think if it keeps staying, I think it's basing to make another move. And maybe to 65, 75, maybe 90. But as I told you, I'm going to keep trimming. I'm going to keep trimming because I've been through bear markets and we don't know. Look at 2011. That was basically, if you invested just purely at the spot price, I'm not even doing the miners. I'm actually going to teach you all one other thing about why I think trimming is important. If you bought silver, let's do all, in 2011, you're underwater. It's the year 2025. You're underwater for 13 years. And you weren't made whole on your purchase until just a couple of days ago. So that's another reason I'm trimming. Now a lot of my silver was bought 35, 20, 15, and for a while I was underwater. So I'm actually going to pay taxes on this silver. Anyway, let's go to gold. Let's go to gold. Let's do all. You bought gold in 2011. That did not come back anywhere near till 2020. And then if you forgot to sell there, and let's say you need around 2,000 to sell to make good, you had to wait again till 2022. And then if you waited to have a serious profit from the 2011 high, you had to wait till probably about this year. That's about 13 years, 2011, so 12. It's 8, another 4, 12 to 13, 14 years. I don't know the exact one. That's just and you spent, at least if you bought in 2011, you spent at minimum the next 8 years underwater. And you could have spent all the years underwater up until I'm not trying to scare any of you, up until this year. Who knows? I saw some people, or maybe even last year. But I'm just being realistic. And I'm just telling you why I'm doing something. I'm not, as I said, I don't even think this is the top, and this is why I'm trimming. And let's go to another example. We'll go to the GDX. Why is this sale? All right, good. If you bought miners, that was around, gosh, GDX was around $63 in 2011. Now, there are juniors who went bankrupt, but nowhere near. But you are not made whole. Even at 2020, even though the price was the same, you're still underwater. Let's say you brought in 2011. 2022, you're still underwater. You don't really break even until this year. No, you don't break even until halfway through this year. You don't profit till halfway through this year. You don't break even till halfway. And let's say you brought here in 2008, goes down, finally goes up. Let's say you don't sell at the top. I'm just going to keep you to still profit. If you forgot to sell, to still profit, you had to wait till 2025. Yeah, wow. So, see, yeah, I was at 53. So if you bought the top at 2008 and forgot to sell, then if you forgot to sell in 2011, then you had to wait till now. Can you wait that long again? And I mean, if you trim, yeah. So, I mean, I could be wrong. I mean, I could be wrong. This could be the top because I think there's another breakout, but I'm trimming. I'm just saying what I'm doing. This is not financial investment advice, but I'm trimming. And I'm just showing you 2011. And I'm doing this because there's so much. You have Wall Street, you have all these channels. Uh, Let me see. Store financial. Let me see. I'm just gonna try to see. I'm not picking on this channel, but look, it's gold's your monetary doomsday clock. You have. I like Peter Schiff, and I think he's a good economist, but if you look at Peter Schiff, where was this? Like, this was not the top. Well, 20. Yeah, here it is. Gold 4,000 isn't the top. So I'm just going to say the other thing about banks going bankrupt can be bearish for gold is force majeure. My understanding what that is you're forced to sell. And what do you sell? You sell profitable positions, gold and silver, whether miners or not. So I just want to say be nimble, be smart, use trailing stops, in my opinion, not advice. No shame in trimming. I don't even use trailing stops because I always get screwed on them. So I just trim a little bit, little bit, little bit, little bit, little bit. And I mean, I'm starting to sell some of the physical. I'm going to the coin shop this weekend. I'm not going to say what because I don't want to reveal too much or where I'm going. Uh, because I had no idea who's watching this. But yeah, there you go. Remember, not financial investment advice, just my opinions, thoughts on the market. Thank you very much for watching. Truly appreciate it. And just, there's a lot going on. And my only advice, this is not investment advice, it's just personal advice. Keep a level head. Try to keep a level head. It is very hard to do. Most people don't. I learned the hard way in 2011. And I wish I had someone telling me instead of, hyping up gold and hyping up silver and talking about hyperinflation. So I'm telling you from my mistakes, keep a level head. And don't get too scared of people calling the top two. You know, could go. Just keep a level head, and that's all. Uh, and whatever doesn't, yeah. Anyway, thank you for listening. If you looked all the way through, hit that like button, subscribe if you haven't, and remember the financial disclaimers below, not financial advice.